Well, hello, hello, hello. This is Trader Travis, and I am back with another weekly recap. This week was an off week for Peter and I. We couldn't sync up our schedules. I was on a plane or about to board a plane. He was traveling. And so this week you just have and I'm not going to turn on my camera this week. I'm just going to kind of show you the charts and walk through the market and give you some tips on how to handle the next few days or few weeks. So right now is a very volatile time in the market. If you use Market Club, it triggered a red weekly trade triangle on Monday. And so that lets you know that in the next few weeks, the market may go down. And so we can look at the previous monthly trade triangles and see how accurate they were. And we see that the market did in fact go down after these weeklies. Now, how much it will go down, we don't know, but they are designed to prevent a catastrophic loss. I just got off the phone with one of my one-on-one clients. I just started one-on-one coaching for Success Academy members, and we talked about that. You know, the pure purpose of Market Club is not to catch exact tops and bottoms. It's designed to get you out to prevent a catastrophic loss. You're going to catch sort of the middle sweet spot of any kind of trend. And so that's the purpose of it. So, you know, for example, we talked about the period here in end of October 2018 when the market ran up, but waiting for, you know, a Market Club monthly trade triangle, you kind of missed some of that move. And that could annoy some people. But I was like, again, that's not the purpose of the trade triangles, to catch the exact tops and bottoms. The purpose is to keep you out of that messy middle, you know, where, you know, the market drops 20%. And yes, it had a nice run up, but we couldn't predict that the run up would continue. What if it was just a fake out? You know, like here in this little middle section, right? The market actually had a green weekly here, and then people could have jumped in and got excited, but it was a fake out. The market kept going down. And so that's what the trade triangles ultimately are for, to keep you out of those situations. And if you use it the way it's designed, you will be just fine. So what I talked about, if you don't use Market Club, is last week I drew some support and resistance lines here. They're just price areas where you see the stock has trouble proceeding past. And I said it's pretty predictable, at least for the last few months, since at least April, where the market has came up to this price area, you know, and then fell back down, and then fell down to this price area and went back up. So it looks like, you know, as a channel, it could be market manipulation. You know, institutional investors or high frequency traders are programming it to sell here at the top, buy here at the bottom, you know, and they're just making some gains. You know, they're just buying low, selling high predictably. But other people, average investors, are getting caught up in that and trading emotionally, right? You see the market dropping, you know, pretty hard here. You see volume picking up. You could start getting emotional and start doing things that negatively affect you, like selling stocks only to watch the market take off higher from here. Then you're going to be annoyed. So don't ever do that. That is when you don't have an adequate trade or investment plan. All right. And so what I was talking with this one-on-one client is, to prevent things like that, you plan for this. We can't predict when the market will fall. We can't predict if it's going to be, you know, let's put up a 2-year chart. We can't predict if this little decline here is going to be another October 2018, but we can prepare for that. You know, we can run through, hey, what if the market falls 10, 20%? What can we do to put ourselves in a position, right? And everything we teach in the Success Academy, right? First of all, if you're a Success Academy member and, you know, have a lot of money out in the market at risk right now, shame on you, right? We've taught you better. We always should focus on risk first, profit second. Every single thing you should do should be, let me make sure I prevent a catastrophic loss first. Put that plan in place, and then you focus on profits. Then you focus on making money, because making money has never tripped people up. It's never caused emotional angst, right? It's always losing money. So, you know, trading is, you know, as much as about emotional management as it is about making money. But we usually can't make money until we put systems in place to prevent ourselves from, you know, doing something emotionally that will screw us up. Because I can promise you, case in point, somebody got emotional in October, November 2018, sold, and then they think, hey, I'll get back in when there's a, you know, Market Club, you know, weekly or monthly here. But I can promise you they still felt the pain of the 2018 correction, And then when they got this signal, they didn't trust it, right? Because, and I heard a professional money manager talk about this. He said, what people don't realize is they got out because of emotions. And the same thing, then the same reason that caused them to get out is the same reason that will prevent them from getting in. Emotions. They got out because they were scared. They got out because they were losing money. Emotions. And then when they get a new signal to get back in, they never do because emotions prevent them from getting in. They're scared. They don't know. They don't want to trust the signal. And so they stay out. That's why we don't trade based on emotions. That's why we trade based on systems and rules. All right. So with that being said, I don't think the market is going to keep falling. I actually think it will stay in this channel. I'll be able to know for sure in the next few days if it, falls through this level of support and goes down higher. Then we know we're probably in correction territory, which is fine. The market corrects on average once a year about 10%. That's a fact, right? So our trade plans, our systems should factor that in. Now, if it does crash, hey, you should already have some portfolio protections in place. You know what? I had give me one sec. Let me pause this. I had a list of stocks for you. Give me one sec. All right, I'm back. So before I forget, before I talk about the portfolio protection strategies, I want to share a couple of stocks I'd noticed. I'm not particularly trading these, but I did notice them as I was scrolling through charts, is a few stocks that have not been as affected by the market. Right. So let's go back to the market. The market isn't a channel, right? We're looking for strong trending stocks that are kind of doing their own thing, bucking that trend. Walmart was one of them. Not giving these as trade recommendations, but just showing you, hey, if you look and you dig and you always show up every day and you do your usual routine of going through charts, looking for trades, things like that, you stumble across opportunities like this, little small opportunities where, hey, you can still make money in a market that's very volatile. The general market is volatile, but this stock has been raging higher. And so you could have been in it making money. Same with NEE. So first one was Walmart and then PG. This one is NEE, right? Is down a day, but the last few weeks is going up. The next two are so-so, HD, a little wavy, but for the most part, they've been hitting higher. And then the last one is Apple. So Apple was down today too, but it's been a steady march upward with a little volatility. Now, let's go to the portfolio protection strategies here. All right, this is just some of them, right, that we teach in the Success Academy. There are a lot of others that you can do, but something like this should be always factored in to your trade plan. Okay, so we have renting out your stock, also called covered calls, right? It's not foolproof protection, but it is a way to bring in some income while you're waiting for the market to sort itself out. You're not sitting on your hands like buy and hold investors and suffering. It's a way to still bring in money. Then you have just buying stock insurance, one of my favorite, i.e. just buying put options because the market's correcting right now. My put options are making money. All right. Then you have bearish strategies. That is credit or debit spreads, where the market falls. It's sort of like, buying a put, but it's a different way of doing it. Like a debit put spread would be just a lower cost way to participate in the market as it goes down. And then a bearish credit spread is something different. You bring in income as the market goes. So one of them costs you money, one of them you bring in income, but they're both ways to participate if the market falls. And then you have our usual standard 210 or 110 formula. The market corrects, you could scale back, to risking a tiny bit of your account in the market. But the most you can lose is like, hey, 10% of your account. So your losses are always capped. And that's very emotionally comforting. The most you could ever lose is 10%. Not 30, not 40, not 50% like buy and hold investors, but 10%. And the last two is inverse ETFs. We have something called SDS. That is an inverse of the S&P 500. So we can see that SDS is up today, up about 3.5%. when the market went down. So this will go opposite with the market. And then you have TLT, which is not really an inverse ETF, but people tend to flock to bonds and gold when the market falls. As you can see, bond and gold has been going up when the market is falling. So it's not technically an inverse ETF. It's just something that generally acts opposite of the way the market does. Not, 100% foolproof though. Lastly, my favorite, cash, right? People struggle with cash. Cash is a position. You can sit in cash, right? When you're in cash, you can't lose anything. You can wait until the market provides better opportunities. All right, let me go. There's somebody out in the hallway. I don't want to pick up an audio. We will see you in the next recap, and hopefully Peter's with me next week. All right, talk to you soon. Bye-bye.